It's an uphill pedal for Peloton. The stock is moving lower by about 5.7% here in pre-market trading. This is after the fitness brand announced the departure of co-founders John Foley and Hisao Kushi in another shakeup as CEO Barry McCarthy pushes to stage a comeback for the company. Now, Foley's resignation, that takes place immediately. Kushi will remain in his position until October 3rd. This just the latest slate of some of the executive changes. The time that we've seen this all take place in, though, is really remarkable, as much of this was set on earlier this year. You've had some of the turmoil within the company, everything from some of the supply chain issues that they've had to navigate that's had them halt some production on specific lines, even to the pricing mechanisms that have been wildly out of touch with what consumers who are navigating a broader inflationary environment, what they are willing to or able to pay for some of those connected devices, and for the connected device usership also going down. That was typically one of the biggest areas that they would use for a marketing selling point. So all that considered, Barry McCarthy going to be much more stern with even what they report out to the street. And going forward from here with some of these changes, it's clear that the board is firmly behind Barry, not so much behind some of the legacy leadership.
Well, to be clear, John Foley still, I believe, owns a pretty sizable stake in the company, right? And Foley, it's interesting you use that word stern, right? Because Saz, who isn't here today but has done a lot of talking to the company, reporting on the company, has really drawn the contrast between these two leaders. McCarthy as a much more conventional leader, a more stern leader in this cost-cutting mode. Foley, a much more sort of outsized personality who helped lead the company in that big initial growth push. So it makes sense at this time, at this phase of the company, that he would be stepping aside. We don't know what happened behind the scenes to get him to do so, but it's interesting how McCarthy is now sort of setting the stage for the next phase at the company. He also spoke at an investor conference yesterday, and he said, we slashed pricing in order to survive, but he said, that worked. Now they're going to get to the next place. We've stopped the bleeding, he said. I don't need to run it for cash anymore. Remember, the company said it's going to cut 3,600 jobs over the course of the year. So now that they've stopped the bleeding, stabilized it, the question is now, do they get that growth from an Amazon partnership, for example, which we were skeptical of when that was announced? You know, where does that next phase of growth come? Even if it's not the same magnitude of growth that they saw, like any growth, what does that now look like for Peloton? You
know, it kind of begs this larger conversation that we continue to revisit time and time again when you see a founder CEO kind of finally step away from one of those core positions. And Harvard Business Review has looked at this and studied companies from Google to Microsoft, some major tech companies, and of course Peloton in its own right, one of those major fit tech companies that's out there. And there is the preliminary results that they had seen that indicate founder CEO leadership is associated with a almost 10% higher company valuation at IPO. But then it diminishes very quickly thereafter that with the value of having a founder in that top seat rapidly deteriorates after the value added by a founder CEO essentially dwindles to get this zero approximately 3 years after firms go public. And so Peloton, we're about 3 years after they've gone public.
That is very interesting. Of course, there's always exceptions to the rule. I think of Meta, for example, Facebook. But look at you bringing up the HBR citation there. I like that, getting a little academic here this morning.
For those of us who didn't go to Ivy League, we got to get as close as we can. You know?
Amen.